Based on the historical data and forecast, Bitcoin shows a downtrend. The RSI consistently remains below 50, indicating a prevailing bearish sentiment. The forecast for the next week projects further decline, with prices expected to reach as low as $85,200. Considering these factors, I recommend a short selling strategy. Specifically, we should enter a short position at $89,200. To mitigate risk, place a stop-loss order at $91,400, just above the recent high. Our target price for this trade is $85,200, aligning with the established support level. To refine this strategy, we'll incorporate the Bollinger Bands. The price is currently trading near the lower band, suggesting potential for a bounce. However, the forecast indicates continued downward pressure. Therefore, we'll maintain the short position with the entry price of $89,200 and a stop-loss at $91,400. We will adjust the target price to $86,100, slightly below the forecast low of $85,200, to account for potential short-term volatility. This combined approach of RSI and Bollinger Bands aims to capitalize on the prevailing downtrend while managing risk effectively. Based on the historical data and forecast, Ethereum shows a downtrend. The RSI consistently remains below 50, indicating a bearish sentiment. The forecast data further reinforces this trend, predicting a continuous decline. We'll implement a short selling strategy targeting the resistance level of $3,790. The entry price will be $3,790. We'll set a stop-loss at $3,340, just below the lower Bollinger Band to limit potential losses if the price unexpectedly rebounds. The initial target price will be $2,800, aligning with the forecast price on November 26, 2025. To refine this strategy, we'll incorporate the RSI. When the RSI reaches an oversold level below 20, we will consider covering our short position at $2,800 and re-evaluating the market. If the price breaks through the support level of $2,510, we will tighten our stop-loss to $2,510 to protect against further losses. This combined approach leverages both technical indicators and forecast data to maximize potential returns while minimizing risk. This strategy aims for a high return by capitalizing on the predicted downtrend while incorporating risk management techniques. Based on the historical data and forecast, XRP shows a downtrend. The price has been fluctuating within a range bounded by a support price of $2.02 and a resistance price of $2.17. The RSI values have mostly stayed below 50, indicating a weakening momentum. The forecast predicts a continued decline, with prices hovering around $2.13 to $2.05. Considering these factors, I recommend a short selling strategy. Entry price should be $2.13. Place a stop-loss order at $2.17 to protect against unexpected upward movements. The initial target price is $2.05, aiming to capitalize on the predicted downward trend. To refine the strategy, we'll incorporate the Bollinger Bands. The price is consistently nearing the lower band, suggesting a potential for a bounce. However, given the overall downtrend, I suggest a conservative approach. If the price touches the lower Bollinger Band at $2.07, consider a temporary long position with an entry price of $2.07. Set a stop-loss at $2.05 and a target price at $2.12. If the price fails to reach the lower band or breaks below it, revert to the short selling position. This combined strategy balances the predicted downtrend with potential short-term reversals, optimizing for high returns while managing risk. Based on the historical data and forecast, BNB shows a declining trend, particularly evident in the recent forecast prices dropping to $846. The RSI consistently remains below 40, indicating an oversold condition, and the Bollinger Bands are widening, suggesting increased volatility. We'll implement a combined strategy leveraging RSI, Bollinger Bands, and support/resistance levels. Firstly, we'll initiate a long position when the price touches the support level of $879, confirmed by an RSI reading below 30. The stop-loss will be set slightly below the support at $870 to mitigate potential downside risk. The initial target price will be the nearest resistance level of $927, offering a quick profit opportunity. To refine this strategy, we'll incorporate Bollinger Bands. If the price breaks below the lower band, reinforcing the downtrend, we'll tighten our stop loss to $850. Conversely, if the price approaches the upper band while the RSI is still below 50, we'll adjust the target price to $950. The forecast data suggests further declines, so we'll prioritize the conservative approach. Therefore, our primary strategy will be a long position at $879 with a stop loss at $870 and a target price of $927, adjusting based on Bollinger Bands and RSI confirmations. This portfolio aims for high returns by capitalizing on short-term price fluctuations within a broader downtrend. Based on the historical data and forecast, Solana demonstrates a downtrend, supported by consistently declining RSI values hovering around the oversold level of 30. The price has been fluctuating between the support level of $130 and the resistance level of $140. The forecast for the next week indicates a continued downward pressure, with prices expected to range between $125 and $131. Given this analysis, I recommend a short position strategy. We will enter a short position at $131, placing a stop-loss order at $136 to limit potential losses if the price unexpectedly reverses. The initial target price will be $125, aiming to capitalize on the anticipated downward trend. To refine this strategy, we will incorporate the Bollinger Bands. If the price touches the bottom of the Bollinger Bands, which is currently at $125, it signals a potential bounce. In this scenario, we will adjust the target price to $130, aiming for a modest profit. The RSI consistently indicates oversold conditions, further supporting the short position. This combined approach, leveraging RSI, Bollinger Bands, and support/resistance levels, offers a balanced strategy with defined entry, stop loss, and target points to maximize returns while managing risk. Based on the historical data and forecast, TRON shows a slight downward trend. The RSI consistently remains below 50, indicating a weak upward momentum and potentially oversold conditions. The forecast data suggests a continued decline, with prices dropping from $0.286 to $0.279. The support price is consistently at $0.275, and the resistance is at $0.295. Considering the downward trend and the forecast, I recommend a short position. Entry price should be $0.287, with a stop loss at $0.295, just above the resistance level. The target price for this short position is $0.275, aligning with the established support level. To refine this strategy, we'll incorporate the Bollinger Bands. The price has been trading within the lower band for the past 2 weeks, reinforcing the downward trend. The center band is consistently declining, further supporting the bearish outlook. Therefore, a short position at $0.287 with a stop loss at $0.295 and a target price of $0.275 is the most efficient strategy. This approach combines the RSI's oversold signal with the Bollinger Band's confirmation of a downward trend, maximizing the potential for high returns while managing risk effectively. Based on the historical data and forecast, Dogecoin shows a downtrend. The price has been consistently below the Bollinger Band center and approaching the support level of $0.152. The RSI is generally below 50, indicating a bearish momentum. The forecast data suggests a continuation of this downtrend, with prices hovering around $0.151 to $0.144. Therefore, I recommend a short position strategy. We will enter a short position at $0.163, placing a stop-loss order at $0.152, just above the support level, to limit potential losses if the price unexpectedly reverses. The initial target price will be $0.145, aligning with the forecast data and providing a reasonable profit margin. To refine this strategy, we will incorporate RSI signals. If the RSI reaches an oversold level of 30, we will consider covering the short position or adjusting the stop-loss. Conversely, if the RSI climbs above 60, indicating an overbought condition, we will exit the short position. The Bollinger Bands also offer valuable insights. If the price touches the lower band, it suggests a potential bounce, prompting us to reevaluate the short position. If the price breaks above the upper band, it signals a possible trend reversal, requiring an immediate exit from the short position. This combined approach, utilizing historical data, forecasts, RSI, and Bollinger Bands, aims to maximize returns while managing risk effectively. Based on the historical data and forecast, Cardano is exhibiting a clear downtrend. The price has been consistently falling, and the forecast predicts further declines. The RSI consistently remains below 50, indicating a prevailing bearish sentiment. The Bollinger Bands are also contracting, suggesting decreasing volatility, but the price is consistently near the lower band, reinforcing the downtrend. Therefore, I recommend a short selling strategy. We will initiate a short position at $0.46. A stop loss should be placed at $0.466 to protect against a potential reversal. The initial target price is $0.416, aligning with the forecast price for November 26, 2025. To refine the strategy, we'll incorporate the RSI and Bollinger Bands. When the RSI dips below 30, it signals an oversold condition, potentially indicating a temporary bounce. However, given the overall downtrend, we will not consider a long position. We will maintain the short position as long as the price remains below the upper Bollinger Band. If the price approaches $0.416, we will consider taking profits. If the price reaches $0.466, we will cut losses and exit the position. This combined approach leverages both trend analysis and technical indicators to maximize potential returns while minimizing risk. Based on the historical data and forecast, Zcash shows a volatile trend with periods of consolidation and upward movement. The RSI consistently above 80 indicates an overbought condition, suggesting a potential pullback is imminent. The Bollinger Bands have been widening, indicating increased volatility. The support price of $443 provides a floor, while the resistance price of $702 acts as a ceiling. Considering these factors, a strategy combining RSI and Bollinger Bands is recommended. We will initiate a short position at $687 with a stop loss placed at $691, just above the forecast price for November 26, 2025. The target price for this short position will be $663, capitalizing on the anticipated pullback from the overbought condition. To refine this strategy, we will incorporate a secondary long position. If the price breaks through the $702 resistance, we will enter a long position at $705, setting a stop loss at $702 and a target price at $739, aligning with the upper Bollinger Band. This dual strategy approach aims to capture both potential downward and upward price movements, maximizing returns while managing risk. The RSI is above 80, indicating a possible short-term correction, but the forecast data suggests continued upward momentum, making a balanced approach prudent. Based on the historical data and forecast, Wrapped Beacon ETH has shown a declining trend. The recent price action has been volatile, bouncing between support at $2,700 and resistance at $4,100. The RSI consistently remains below 50, indicating a prevailing bearish sentiment. The Bollinger Bands are also widening, suggesting increased volatility. The forecast for the next week predicts a continued downward trend, with prices potentially reaching $3,040. Considering these factors, I recommend a short selling strategy. Entry price should be $3,170, with a stop loss at $3,230 to protect against unexpected upward movements. The initial target price is $3,070, aligning with the forecast. To refine this strategy, we'll incorporate RSI levels. When the RSI dips below 30, it signals an oversold condition, potentially indicating a short-term bounce. However, given the overall bearish trend, we'll prioritize the short position. If the price reaches $3,070, we can consider taking partial profits and moving the stop loss to break even. If the price fails to reach $3,070 and falls further, we can adjust the target price to $3,040 based on the forecast. This dynamic approach allows us to adapt to changing market conditions while capitalizing on the prevailing downward trend. Based on the historical data and forecast, Cosmos Hub exhibits a downtrend with increasing volatility. The recent RSI values hover around 40, indicating neither overbought nor oversold conditions. The forecast suggests a continued decline, with prices potentially reaching $2.56. Considering the support level at $2.71 and the Bollinger Bands, a conservative strategy focusing on short-term price dips is advisable. I recommend a short position entry at $2.8, placing a stop-loss order at $2.87 to limit potential losses if the price rebounds. A target price of $2.65 is set to capture a reasonable profit during this predicted downtrend. To refine this strategy, we'll integrate the RSI and Bollinger Band signals. When the RSI dips below 35, indicating an oversold condition, we'll enter a long position at $2.68. The stop loss will be set at $2.62 to protect against a sudden price surge. The target price for this long position will be $2.77, capitalizing on the anticipated bounce. Conversely, when the price touches the lower Bollinger Band, we'll enter a short position at $2.56 with a stop loss at $2.56 and a target price of $2.67. This blended approach, combining trend analysis with technical indicators, offers a balanced portfolio aiming for high returns while managing risk effectively. Based on the historical data and forecast, STRK shows a downtrend with a recent bounce from the support level of $0.336. The RSI indicates oversold conditions, fluctuating around 35, suggesting potential for a rebound. The Bollinger Bands are narrowing, which could signal a period of consolidation before a breakout. Given the forecast prices consistently below $0.34, I recommend a contrarian strategy focusing on short-term gains. We will implement a buy strategy when the RSI crosses above 30, aiming to capitalize on the potential bounce from the support level. Specifically, I suggest entering a long position at $0.338 on November 20, 2025. Place a stop-loss order at $0.336 to protect against a potential breakdown below the support. The initial target price should be $0.346, aligning with the recent resistance levels and a reasonable profit target for a short-term trade. If the price continues to rise, we can adjust the target price to $0.353. This strategy combines RSI, Bollinger Bands, and support/resistance levels to maximize potential returns while managing risk. Based on the historical data and forecast, just shows an overall upward trend with consistent support around $0.0375. The RSI consistently hovers above 60, indicating bullish momentum, with brief dips below 70. The forecast data suggests continued upward movement, reaching $0.0392 by November 26, 2025. Considering the RSI, we will implement a strategy that leverages this bullish trend. We will enter a long position when the RSI falls below 60, anticipating a bounce back. A potential entry point would be $0.0362, placing a stop-loss slightly below the support level at $0.036 to protect against a potential downturn. Our initial target price will be the resistance level of $0.0394, aiming for a quick profit. To refine the strategy, we will incorporate the Bollinger Bands. When the price touches the lower band, it indicates a potential buying opportunity. Combining this with the RSI, we will enter a long position at $0.0362, set a stop-loss at $0.036, and aim for a target price of $0.0394. If the price continues to rise and breaks through the resistance, we will adjust the target price to $0.0394. This blended approach, utilizing both RSI and Bollinger Bands, offers a balanced strategy for maximizing returns while minimizing risk. Based on the historical data and forecast, PAX Gold shows an upward trend with periods of consolidation. The RSI consistently fluctuates, with recent values above 50, indicating bullish momentum. The Bollinger Bands have been narrowing, suggesting a potential breakout. Considering these factors, I propose a combined strategy utilizing RSI and Bollinger Bands. We will initiate a long position when the price touches the support level of $4,020+ and the RSI falls below 40. The stop loss will be set at $3,900+, just below the lower Bollinger Band, to mitigate potential losses. The initial target price will be $4,110+, near the recent resistance level. To capitalize on the anticipated upward trend, I suggest a second long position when the price breaks above the upper Bollinger Band, around $4,170+, with an RSI above 60. The stop loss for this trade will be $4,090+, slightly below the upper band. The primary target price will be $4,130+, aligning with the forecast. We will manage this portfolio by dynamically adjusting stop-loss levels as the price moves, securing profits while allowing for continued upside potential. This combined strategy aims to leverage both momentum and volatility for optimal returns. Based on the historical data and forecast, Pump.fun exhibits a declining trend. The price has been fluctuating within a range bounded by the support price of $0.00289 and the resistance price of $0.00359. The RSI indicates that the asset is currently in a slightly oversold condition, hovering around 40, but trending downwards. The Bollinger Bands show a narrowing range, suggesting decreasing volatility, and the forecast predicts a continued downward trajectory, reaching as low as $0.00262. Therefore, a short position strategy is recommended. The strategy involves entering a short position at $0.00317. The stop loss should be set slightly above the recent resistance level at $0.00359, specifically at $0.0036 to account for potential upward price swings. The target price is set at $0.00262, aligning with the lowest forecast price. This strategy aims to capitalize on the anticipated downward trend while mitigating risk with a carefully placed stop loss. The RSI and Bollinger Bands further support this decision, indicating potential for continued price decline. Based on the historical data and forecast, Dash shows a downtrend with significant volatility. The RSI consistently dips below 80, indicating a lack of overbought conditions, but frequently approaches the oversold level of 20. The Bollinger Bands suggest periods of high volatility, with the price often touching the upper and lower bands. Considering these factors, I propose a strategy combining RSI and Bollinger Band signals, with a focus on capitalizing on short-term price swings. We will initiate a long position when the RSI falls below 20 and the price touches the lower Bollinger Band, anticipating a bounce back. The entry price will be $69.9, with a stop loss set at $50.3, coinciding with the support price, to limit potential losses. The initial target price will be $78.1, aligning with the upper Bollinger Band. To refine the strategy, we'll implement a trailing stop loss mechanism. Once the price reaches the target of $78.1, we will move the stop loss to the recent swing low, around $73. This allows us to secure profits while participating in potential further upside. If the price retraces and touches the lower Bollinger Band again, we will consider another long entry at $73, with a stop loss at $50.3 and a target price of $81.5, the recent resistance level. This approach combines the momentum of the RSI with the volatility indicated by the Bollinger Bands, aiming for high returns while managing risk effectively. The overall portfolio will allocate 60% to the combined RSI and Bollinger Band strategy, 20% to a simple long position based on support and resistance levels, and 20% to a conservative strategy of holding cash. Based on the historical data and forecast, Near Protocol demonstrates a fluctuating trend with support at $2.1 and resistance at $3.03. The RSI fluctuates between 44.1 and 68.4, indicating periods of both oversold and overbought conditions. The Bollinger Bands show price volatility, with the middle band generally trending upwards. Considering these factors, I recommend a combined strategy utilizing RSI and Bollinger Bands. We will initiate a long position when the RSI dips below 20, and the price touches the lower Bollinger Band. The entry price will be $1.67. The stop loss will be set just below the lower Bollinger Band at $1.65 to mitigate potential losses. The target price will be the upper Bollinger Band, $3.04, aiming to capture the anticipated upward movement. To refine the strategy, we will also incorporate support and resistance levels. If the price approaches the $2.1 support level while the RSI is below 40, we will consider adding to the position. Conversely, if the price reaches the $3.03 resistance level and the RSI is above 80, we will consider taking partial profits. The portfolio will allocate 60% to the combined RSI and Bollinger Band strategy, and 40% to the support and resistance-based adjustments. This diversified approach aims to maximize returns while managing risk effectively, targeting a potential profit of 3.04 minus 1.67 is equal to $1.37 per near protocol. Based on the historical data and forecast, Zcash shows a volatile trend with periods of consolidation and upward movement. The RSI consistently above 80 indicates an overbought condition, suggesting a potential pullback is imminent. The Bollinger Bands have been widening, indicating increased volatility. The support price of $443 provides a floor, while the resistance price of $702 acts as a ceiling. Considering these factors, a strategy combining RSI and Bollinger Bands is recommended. We will initiate a short position at $687 with a stop-loss placed at $691, just above the forecast price for November 26, 2025. The target price for this short position will be $663, capitalizing on the anticipated pullback from the overbought condition. To refine this strategy, we will incorporate a secondary long position. If the price breaks through the $702 resistance, we will enter a long position at $705, setting a stop-loss at $702 and a target price at $739, aligning with the upper Bollinger Band. This dual strategy approach aims to capture both potential downward and upward price movements, maximizing returns while managing risk. The RSI is above 80, indicating a possible short-term correction, but the forecast data suggests continued upward momentum, making a balanced approach prudent. Based on the historical data and forecast, Artificial Superintelligence Alliance has shown a fluctuating trend with a recent consolidation phase. The RSI values indicate periods of both oversold and overbought conditions, suggesting potential for price reversals. The Bollinger Bands have been contracting, indicating a period of low volatility, which could soon expand, signaling a potential breakout. Considering the support price of $0.267 and the forecast for November 26, 2025, at $0.328, I recommend a long position entry at $0.29. A stop-loss should be placed slightly below the support level at $0.267, to mitigate potential losses if the price declines. The initial target price should be set at $0.384, aligning with the upper Bollinger Band, aiming for a quick profit. To refine this strategy, we'll incorporate RSI and Bollinger Band signals. If the RSI falls below 20, oversold, during the forecast period, consider an additional long entry at the prevailing price, with a stop-loss at $0.255 and a target price of $0.35. Conversely, if the RSI exceeds 80, overbought, consider a short position, though this is less likely given the overall upward trend. The core strategy remains a long position with an entry at $0.29, a stop-loss at $0.267, and a target price of $0.384, adjusted based on RSI and Bollinger Band signals for enhanced returns. Based on the historical data and forecast, Starknet shows a clear upward trend. The price has been consistently making higher highs and higher lows, supported by increasing RSI values and the Bollinger Bands expanding. The RSI is currently fluctuating around 70, indicating overbought conditions, but the forecast suggests continued upward momentum with prices reaching $0.251. Given the current conditions, I recommend a long position. We will enter a long position at $0.203. To manage risk, place a stop-loss order at $0.18, which is slightly below the lower Bollinger Band and provides a buffer against short-term volatility. Our target price will be $0.251, aligning with the forecast and providing a reasonable profit margin. To refine this strategy, we will incorporate RSI signals. When the RSI dips below 30, indicating an oversold condition, we will consider entering a long position. Conversely, when the RSI exceeds 70, signaling an overbought condition, we will consider taking profits or tightening our stop loss. Combining these signals with Bollinger Bands, we will enter a long position at $0.203, set a stop loss at $0.18, and aim for a target price of $0.251. This blended approach leverages both momentum and volatility indicators to maximize potential returns while effectively managing risk.